this computer. Okay, it's been recorded. So again, today is all about just getting on with, just look at the direction I want to go. So I am going to lead. I'm not going to let you lead me, guys. I've been doing this for 10 years now. I've been trading for 20 years, and I wrote the logic for this all of last year to get to where we are. What I need to do now is put it into the hands of other traders with a different mindset, so we can start to understand if there's improvements that we can make. And one straight away from Chris in the WhatsApp group is that I've noticed on some of our automated strategy builders within the trading sessions mode, we can have longs or shorts activated in that particular time of the day. We don't have that in this particular case, and so that's an addition that we're going to look to build in as well. So thank you very much for that, Chris. So I'm just going to take oil off screen right now, and I'm going to go and look at silver. So you may have seen me posted quite a lot of posts on silver, and a lot of the reasons why this is one of the commodities that I looked at when I was writing the logic last year. So 2022, we wrote the logic and launched the Guardian zones, which basically is a very complex logic, is looking at those multiple time frame support and resistance, putting them on and off when they're breached, taking them off, and then the whole idea of then is looking for those confluences between sometimes the same time frame support and resistance, but also, yes, I am actually very excited about this, to be honest, because I've got plans for this in a couple of years' time. So really excited about this. But it's about looking at those confluences, and this is why everything's led to the confluence strategies that I want to concentrate on over the next 5 years or so. And that's why the book came out at the end of last year, because the last 10 years has been designing all the strategies that I trade manually and putting them all together. And then we've actually automated 4 of those now. So it was a natural time for the book to come out to talk about confluences. And this is the real first one of that sort of breed of where we look at those confluences and those support and resistance zones. And the logic it surrounds that as well. It surrounds that logic of support and resistance on multiple timeframes and where those confluences are. So one of the things I wanted to discuss is some of the options that we've got. And I know, Chris, you've changed the max. So what I'm going to do is just going to go into the back end a little bit, and a lot of it will be going backwards and forwards. So one of the issues that I had when I was writing the logic, and then when I got the indicator, was even though when you write the logic for something, you in your mind know how the strategy is going to be traded anyway, and which trades you would miss. The problem was, if you go down to quite a small time frame, even the 10-minute or even the 5 or 3 minute, the native support and resistance can sometimes overlap, but they're very narrow. But so, yes, we got loads of fresh air every time, but it adjusted the stop too quickly and it took us out. So when we look at a fib extension of, to go to 100 before we break even, if the range is only 4 ticks. Once it moves to 4 ticks, it goes to risk-free and just dips down 2 ticks and take it out. So one of the things that we added, probably I think it was just about 6 weeks ago, was this the minimum fib anchor distance. It's very important. So it's almost like saying, right, if anything under 30 ticks, then that's the whole width of the zone. Or indeed from the stop to the entry, depending on the logic. If it's less than 30 ticks, it won't take it. But also, on the other hand, where that minimum risk is. So if it's 2 contracts at 30 ticks, that's like having 60 ticks worth of risk minimum. It could be 50. One of the things I'm looking at uh, in reality is, do we have a max fib anchor as well? The only issue with that is you would lose some of the big runners, because when you bounce off a confluence support or resistance, there's usually a lot of momentum, because a lot of institutional traders will put buy or sell orders in that zone. And the same if you push through, they'll have orders on the other side of the zone, and it'll gather momentum. So it doesn't matter really to me if it's a thick zone. We minimize the risk by adjusting the stop quite quickly, and that's what one of the things I want to concentrate on over the next month is how we do those stop loss adjusts, and is there a way to figure out how, if we've got 100 tick confluence zone, that's 100 ticks initial risk, but only at 50 ticks we could make it risk free. Or at 20 ticks, so at 20%. So we may have to design that stop loss adjust to break even depending on the size of that confluence zone. That becomes quite complicated to write the logic, but I'm sure that we could do that. My cursor's in yellow. So I'm just talking at the moment. I'm not actually pointing to anything. But the minimum fib anchor here is default to 30. And one of the things I want to explore today is changing that and see how it changes the performance report. I want to go through how to get the performance report, look at the times of the day, the days of the week, and looking for those patterns. Then we're not really going to talk about when to take profit. I really want to talk about today is the user break even stop loss, and then to update the stop loss update. We can do 3 at the moment. It's just defaulted to 1 when it goes to 160, and we need to explore. And what I want the beta testers to do next week, we know it executes, otherwise I wouldn't have given it you. Okay, we know the trade management managers and adjusters, otherwise I wouldn't have released it. What we need to do now is figure out, is 3 stop loss adjusts enough? Does it help us when we're optimizing to be more aggressive? And this will come especially on different instruments. So I don't trade ES. I definitely don't trade NQ. I'm an oil trader and a copper trader, and I like a bit of gold and a bit of silver every now and then. So when we look at oil, for example, this stop loss is adjusted now. Okay, so this is important to understand that we're in 36 profit now. It doesn't go on ticks; it goes on the fib extension, the risk to reward. So when I look in this, this strategy is called it's a continuation strategy. It's gone up above and it's come back down. It's come back down through, and then we've got that first take profit at that big next zone. The next take profit will be when these cross. So this will not be likely unless it really pushes through this zone. This is why we have the stop loss adjust. So if I go into the back end of this strategy now without switching it off, we can see for the continuation strategy, my break even is at 100% fib. Yeah. And then when it goes to 160%, okay, I adjust the stop loss to 100. So when it hit this 79, 97, it went to break even. Yeah. When it went to 160, it goes to the 100. And I've put this now at 260. So if it goes at 260, it will adjust to 160, and then 300 to 200. So let's look at that and see what that looks like on a fib extension, because I think you need to understand that a little bit easier. So with a continuation trade, the stop's above the next zone. It's not above the pivot. Okay, we look at zones, especially confluence zones, as protection. Yeah, once it pushes through, in theory, it's protection. If it's going to come back through and up, we need to be out here. We don't need to let it ride all the way up to that pivot because that's too much risk. So if I'm just going to use the fib extension tool here, just to highlight what we're looking at here. So that was a 41, so it's about 42. It's not going to be overly accurate. I'm not as accurate as an algorithm. Okay. So stop loss was 2 ticks, I think. There we go. Okay, so what we have is once it reached 100%, it moved to risk-free, okay? Then when it went to 160, it adjusted it to 100. Again, my drawing's not as accurate as an algorithm. Then I'm just going to adjust this and put a 260 on there. So let's look at those properties. Let's add a price level here. 260. We want grey. We want green. There we go. Click OK, click apply. So in this case, 260, again, it could be anywhere. This could be a lot bigger gap. The gaps are quite small. The distances between those confluence zones are quite small at the moment because we had the reset on Friday with the data, and it's taken a couple of days to get to start to produce those zones again that are tested, that are broken, so the software can start to put those on. Right, let me just switch my camera off. My team said you must show your face. It's been like that for years. I don't like my face, so I don't mind switching it off. And do me and again, if you're on a laptop, it's going to be small anyway. I haven't traded off a laptop for ever. This Tim Sykes thing, trading a laptop by a Paul, is not good. So this has done what it's supposed to do. Okay, it came back through. It got the entry. Okay. We've adjusted to break even at 100. It's gone through 160. It's adjusted it to 100. We've programmed it in then to, when it hits 260, to adjust it to 160. It also has the first contract to be taking off at the top of the next confluence zone. And that comes from within the strategy here. When we go down to this continuation trade, 2 contracts are going on. Exit on the next zone is 1 or a maximum of 500 fibs, so 500%. So if this was a massive gap and the next zone was like 1,000% or something like that, most day trades, most 10-15 minute moves like that are not going to get to 500%. So this is you can change that, and then this is when it comes with the optimization. And then the next one is on exit, yeah, or if it takes out one of these pre-programmed stop loss adjusts, okay. And the crossover exit is these 2 EMAs here. Now we need to go back and look at the 2 monster trades from the last couple of days. So what happens here is, let's look at this short here. Okay, so the first contract comes down, it hits that target at that support, and this, that's what it's supposed to do. And the other one runs because as we're coming down, the green crosses the red. Okay, and this is adjustable. So depending on the time frame and the instrument that you're trading, you can adjust these EMAs as well. And we're going to do that another day because that's trade management. So the main thing is here, it doesn't cross. Oil, I take through the close and will continue to trade because oil is more tradable Asian session, European session, everything else. Silver, I would always take off at the end of the session. Not many people trade silver in Asia or Europe. So it's just knowing your instrument. And one of those things I talk about, getting married to your instrument, just trade one instrument, just get to learn it back to front, understand how it behaves, especially between these zones. You can understand, do you select the option to close the trade at the end of the session or not? With oil, I never do. So this one comes down, comes down, comes down, and all of a sudden, we get the cross here and we get taken out. Okay, so that's that option. Now, you could choose, if you wanted to trade two contracts, to take both off at that point there. That's quite fine. Okay. The problem is support and resistance zones are there to be broken as well as respected. Okay, so in reality, you could argue actually take both off there. If it does push through, it's just going to take another trade. But if the risk to reward to the next support zone is less than 161%, it won't take the trade anyway. Why not let it run? Give it chance to breathe. Have those stop loss adjusts. Okay, so it's just taking the trailing stop out now and taking the profit. Okay, and it's done what it's supposed to do. So let me just come off oil. I'm just going to leave that to run, and I'm going to go back to silver. So I'm going to go back to silver and put the strategy back on again in a second now. And I'm just going to, so stop loss adjust is very important. So we're going to come back to that when we've learned how to sort of optimize and find the best time slates. This is silver. I've had some mega trades and I've shared those on the Discord group. So when the chart set up, so I'm looking at 10 minutes in the moment. I want everybody on the beta test group just to stick to 10 minutes right now. Okay. Whichever instrument you choose, and choose an instrument, and in the WhatsApp group, by the end of this week, I need you to tell me what instrument you're getting married to for this beta test phase. Okay. I don't want you to change. You're getting married. You're getting married to that particular instrument, and you're not going to be distracted by any other instrument. And you're going to learn that behavior, because if you keep chopping and changing, you won't be as effective at trying to build this super automated strategy, because you will be changing that data set all the time. And you need to leave it running in Sim. You need to leave it running overnight. Understand and check if there's any errors with execution, with orders, all that sort of thing. You can't do that if you're trying to do it on too many different instruments. So in the WhatsApp group, okay. Okay, Daniel's already put it in there. He's marrying MCL for the test. Okay. So in the WhatsApp group, tell me what you got. Gold. Okay, somebody's doing gold. So that's good. So what I want to do now is go make sure on the data series as well, we're going to look at 60 days. So we're not scalping. We don't need 6 days. We don't need 30 days. When we are optimizing this, I reckon we need around about 60 days. Okay. And then once we find a sweet spot, we can then increase that to see if it reduces by a large margin if we go 90, 120 days. But to begin with, starting point 60 days on the data series. So when we've got that and we've got it running, okay, if we go to strategy performance, we can see this. Well, I'll be doing silver, oil, and copper. So that's me anyway. Well, okay. So I've done my this is the net profit on silver, 2 contracts, $16,000 on the default setting. Okay. It's only got a percentage profit of 62.5%. That's no good for me. I need to be in the 80s. You know, the profit factor is still pretty good. One of the things we really need to be drawn to is the max drawdown as well. because we need to reduce that. So one of the things when we're optimizing and we're looking at those stop loss adjusts to break even, and even just talking to you now, I need to speak to the developer in the next month or so, and we need to find a way to have different stop loss adjusts depending on the size of the stop to entry, the risk. So I need to think about that logic. I need to get rid of this cold so I've got a clear head. But I've already made a note. I'm just going to make another note now. So always have a notepad by the side as well when you're writing logic. I mean, I've got books and books and books of notepads as I, write logic for different things and test it and manually test it and then test the auto traders. So stop loss adjust choices for okay, right. So yeah, drawdown's a massive consideration. It is when you're trading a large account of your own money, Larry. Believe you me, that's not acceptable. On two, if I was trading 4, 5 contracts, that would be acceptable, but not two. Profit factor's a good starting point for me here. But again, we can see, I mean, it were pretty evenly spread between short trades and long trades, but there's less losers on the short side, but they were big ones. So profit's pretty good. We need to get the drawdown down. Number of trades 32, so it's about 2 a day on average. Not bad. I'd like to reduce that a little bit as well because I'd rather find the really hot trades. So not forgetting when you're optimized, your net profit might go down a little bit. But if you reduce the max drawdown by a massive amount, you're not taking that risk. Okay. So one thing you do here, when you right click, export it as a CSV. Okay. You can see this is me to just today. Okay. Export it as a CSV and then it will come up like this. And this is your comparison. Yeah. So when you start to make changes, you're going to compare it to your starting point. Okay. Now, I will send, I mean, it's pretty good, isn't it, Neil? So it's not, the reason why I took a year to write the logic and then 3 months I mean, this is the version you've got is actually version beta 4 or something like that. So it's pretty hot already, but it can be a lot better in my mind. Okay, so I'm a bit of a perfectionist. But I need people to try and break it, okay? And I need people to give me good positive feedback, like you've already started to do, and I'm already taking notes, and I can already see what the next version is going to be looking like. So, so when I've done that, what I want to really do, first of all, is I want to look if there is a specific time of day that's really bad for this, okay? So with some instruments, they may do very well just after data on a Thursday and a Friday. It may be the catalyst that they need to push through or hit a resistance and bounce back down again, because that's where there's going to be a lot of institutional orders. But some instruments won't react like that. So you need to understand your instrument and how that's going to react. So we're going to click on analysis. One of the first things you do with analysis, and remember this, change the base time to entry. Okay, that makes a massive difference because when we are going to look at the times of the day, it's when it enters. We don't care when it exits, it's when it enters. So then we're going to look at the hour of the day. Okay, so this is our pattern over 60 days. We can see actually between 9 and 10, so between the oil pit open and the first half hour of the US session, silver is abysmal when it comes to support and resistance zones and confluence zones. It must just leak through and come back again and all that sort of thing. So, it's bad. So what we need to do is get our notepad. I'm just going to go back to the other page and we're going to write those in. So we're going to go 12 a.m. to 1 p.m. We're going to look at 5 a.m. to, right, so that's 9, but I don't want to be in and around all the volatility of the oil pit open. So I'm going to look at an 8:55 a.m. Then I'm going to go at 10 a.m. and right, even though there's no trades in here, I'm not going to include that time because it's an unknown quantity. I'm only going to go with the data that I've got. Okay. So I'm going to look at 10 to 11 a.m. Yeah. Maybe 11:05. Just do. There is some at night. There is a bit more risk for running that, but it's not a bad little profit there. So we're going to go 9 p.m. to so that 11 there. So we're going to go 9 p.m. to 10:45 p.m. Okay, so I've got the sweet spots. Okay, I can see when my bad spots are. I can see it all red in this data up above here. I can go down a little bit more to half hour of the day. Okay, but it doesn't really change that much. I can see where that is. In reality, what I'm not going to do is look at the day of the week for now, because you need to get rid of the average losing times of the day. Now, a lot of this, again, so silver doesn't react. So we've got at 2 a.m. EST is the gold pit open for Europe, okay? At 3 a.m. EST is the London open. So we can see that market opens, both European and US, silver doesn't respect the support and resistance zones, okay? And it doesn't, the strategy doesn't work, okay? There is no golden goose. There's no fire and forget, and every single one will work. It just doesn't work that way, okay? There are confluences within the market with data, with market opens, increased volatility, increased volume, that any algorithm would struggle to understand because it's an algorithm, it's got rules. There's no artificial intelligence in trading, okay? It doesn't exist because every day is a different day, okay? Every retail trader, every institutional traders have a good night, bad night. They've had a good week, a bad week. Hi, Trevor. So what I'm going to do now then is I've identified those best times of the day. I've already got the spreadsheet to understand where my start point is, because I don't forget I want to decrease the drawdown whilst not whilst obviously keeping profitable. So when I go back into strategies, I'm going to disable it, and then I'm going to scroll down to trading sessions. Okay. So I'm going to go to all days for now. I'm not going to select any days. And this is where I'm going to get some changes made, not straight away, but I want to add the option to have only shorts or only longs. So we do that on a couple of the ASBs. I didn't ask for it in here because I didn't think it would be an issue. It may not be. It may just be a rabbit hole that I'm going down, but I think I might add them for the next version so we can see. So just check my times again. So 12 a.m. to 1 a.m., 5 a.m. to 9. Well, I'm going to go that 8:55, aren't I? 10 a.m. to, I did 12 on here. I'm going to leave it at that. And we've got 9 p.m. to 11 p.m. That's fine. Okay. So there's those time slots. I'd already pre-done it. Like Blue Peter for those in England. Prepared it earlier. So I'm going to switch it back on now. So whenever we switch it back on, we see the auto entries are disabled. So we need to click that enabled, but you'll see it's still in gray. All these gray bits down here is when it will not take a trade. Okay. And we're in that time now. Okay. Yeah. So we'll only trade where there is white along here. So let's have a look at that performance report now. Whoa, okay, $21,000, profit factor 14, percentage profitable 89.47. Only 19 trades, that's what I like. Okay, only 19 trades compared to 32 before gives me an extra $5,000 profit. Look at the max drawdown now, $1,100. Okay, really, really good. That's over the last 60 days. Number of winning trades 17, number of losing trades 2. Excellent. Okay, I know this is good because I've been trading this since we got it. Actually, even last year, and I was doing it manually. Silver is really hot, but it's high risk, guys. That's $50 a move because I'm trading 2 contracts, so it's not for everybody. But I'm just trying to show you this because this is one of the biggest experiences I've had with this. So largest winning trade 3195. So you can see our max drawdown there is the same as the largest losing trade. So that's $1,100. That was a 1 losing trade. We're going to find that in a minute to see if we can learn from it. And then average number of trades per day, half a trade. Okay, that's good. I like that. Okay, because I want to select the good trades. I want to take the risk away. It's telling me that when we have market opens, when we have oil bit opens and gold opens, it's not good for silver. So I've taken that out of the equation. Okay, we can look at the short trades against the long trades. It's around about the same. Okay, so 12, 9. It's pretty similar. The worst trade was the short on the 1100. We're going to go and try and find that now. But a profit factor of 14 is phenomenal, honestly. And we got there. So before I do any changes, I'm going to export that CSV because that is where I want to be right now. Okay, so now, okay, I am not going to go back to the old one. So what I'm going to do, first of all, is before I do anything, I'm going to right click, go to strategies. I'm going to go to template. I'm going to save. I'm going to put SI 10-minute. What's the date today? 6th of March. 6th of March 2024. And then I'm going to call it iteration 1. Okay, it1. So I'm going to save it. Okay. Once you save that, you've got to disable and you've got to enable again. But what that's done then is you can share that. So I'm going to go to my folder. I'm going to go to documents and I'm going to find NinjaTrader 8. I am going to go to templates. I am then going to go to strategy. Then I'm going to go to ZoneTrader Pro. Then I can find SI 10-minute 6 match March 2024 iteration 1. I can copy that if I learn how to do it with the new Windows, that is. There we go. And I'm just going to paste that into the WhatsApp group now. Okay. So those that have got the ASB, ZoneTrader Pro, will now be able to go into this same folder, documents, NinjaTrader 8, templates, strategy, ZoneTrader Pro. Once they've downloaded that particular XML file, drag it into here, let go. Then when you're on your chart for silver, you go to strategies, template, load, and it should pop up in a minute. Did I just miss it or something? Oh, I've got it enabled. Hang on. I was going to swear then. So when it's disabled, go to template, load, and you'll see SI 6 a match. We'll always remember that now. Click load, click enable, and that new template is on your chart, and that's what will be traded. Okay. So the idea of this phase of beta testing, and it could take 6 months, guys, because I'm not going to release it on lease until it's ready, is that we can share those. Now, it may be that Damien sorts out a depository for those particular files, because there'll be quite a lot. Now, Vic, who is one of my brand ambassadors, he is he's an expert. He's been with me. He's had my software for 6-7 years now. He's had the ASB since they got it there. He's been on my apprenticeship. He's there. He's going to help support me and obviously you guys. So between us, we will look at those XML files and try and critique them. Now, please don't. There's going to be 20 of you in theory. There's five spots left to get the lifetime license and the beta testing. Please don't send 2 or 3 a day, all 20 of you, because I will never have a life. Okay, do your work first and only on the one instrument, and then share it in the WhatsApp group. If it starts to get too busy with those, we'll find another way of doing it on Google Drive or something like that. So it's as simple as that to do it. Now, what I want to do is, you see these profit prints over here? These are the trades, okay? What I want to do is I want to go and find that losing trade. So it'll be a down. That's a small losing trade there. You know, this is where, you know, we had quite a narrow zone. So, you know, maybe if this was to occur lots of times, you would think to increase that that max from 30 to 40 to 45 or whatever it is. But remember, the more you're increasing that, you're actually increasing your risk as well. Okay, so it's got to be a blend, because if you say max risk of 50, it's not going to take a trade until you've got a risk of 50. Okay, and that's 50 ticks. And if you're on silver, one contract, that's $25 a tick times 50. Okay, so just be aware of that as well. You're more likely to better to stick to a slightly lower one, but be more aggressive on the times of the day it trades, and you know, and sort of manage it that way. But again, I don't know until until you do that instrument. So I'm just going to keep scrolling back. There is the big one. Okay. So this big one here was a result of data, most likely. Let me just put my crosshair on. 840. Yeah, so we had an 830 data. Let me just check. Let me just switch on the data box. Bring that over. So if somebody can quickly look at the 18th of January, I can guarantee what day of the week. I can just about tell by the day of the week what date it was. Bear with me a second. 18th of Jan. Thursday, day to day. Okay. So this was a data reaction that initially pushed through, and this is important to understand, a confluence of native zones. Okay. So this trade around data did not do well because the confluence of zones were there, but it was a confluence of native zones. So we can do something about this to see if it changed the overall picture performance for the whole 60 days. So what we can do is we go into strategy strategies, sorry. Click apply. Right, I've got to be quick here, guys, because in 20 minutes I have a meeting with NinjaTrader themselves. So what I want to do is, so the time frame configurations here. We're going to click on native. It's enabled at the moment. Okay. Disable it. Click apply. The trade has gone. So there's no native time frame support and resistance there now. Okay. Just higher time frames, and it will only trade on those particular higher time frames. Now, that being said, how does it affect our overall performance? So let's go to the performance report. We've reduced our profit from 21,000 to 14,000, but we've reduced the max drawdown to 700. The profit factor shot up to 71. We've only had 11 trades, one loser, 91% win rate. Okay. So you've got to think now when you start to use this in anger in real life with real money, is a slight reduction on a reduction on net profit over that 30 days better than actually taking that risk with those max drawdowns? You've got to make that decision yourself. So the blue lines, that we just get rid of this, Trevor. The blue lines here are that follows the trade. That every time a candle closes, that hashed blue line there, and then obviously the profit still remains the same until the next trade, sort of thing. Yeah. And again, with silver, unlike oil, I always close at the end of the session. You can see what happens on this trade here. So you've got to think here now that this is where greed can actually trip any trader up. I want to make $21,000 every 60 days. It's not guaranteed. But what is guaranteed is you're leaving yourself open with those native timeframes on this 10 minutes. I'm not saying, 15 minutes, it might be slightly different. To those drawdowns of an extra $400, those max drawdowns of $1,100. You've got to make that personal calculated risk of whether you want to do that. For me, I'm happy with that because it's not, to be honest, a max drawdown on silver $1,000 ain't a lot. So what I'm going to do is going to put native back on again. Okay, but that is an option. Okay. Right, so I put native back on, so that will give me back to 21. What I want to do now in the last 10, 15 minutes is I'm going to do some more stop loss updates. I'm going to put a 260, 160, and then I'm going to put a 400 to 260. That's quite aggressive. I want to see what that does. And again, this is your trial and error. So I know I've gone back to that native time frame. I know that this spreadsheet here is my base. I've got 21,000, 19 trades, 2 losing trades. That's my max drawdown. What I want to do now is to see if by being aggressive with more trading a stop trading stop adjusts, does it affect the data better or worse? This is why you've got the option to do that, purely because when something runs and has pullbacks and the momentum starts to go, you don't want to get tipped out and it goes again. Again, adjusting those may help. So I'm just going to go back. Okay. So I'm just going to look at the strategy performance report now. Okay, we're still 21045. That's not actually done anything. Okay. 89.47. Yeah. So even by being quite aggressive, that's not really done anything because when it runs, it runs. Okay. Let's go back. Can't really tell because that move's not really over. Just going to look at these trades. Um, and the only way to actually manually check this, guys, and this, it could be a ball ache, but again, you're getting married to one instrument, you've got to put the time in. When this breaks through here, you've got to look, put on your fib extension, go a couple of ticks below, a couple of ticks above, just get a rough idea where those points are, okay? I'm going to add a few more. So I'm going to add the 260. And we said 400, wasn't it? 400. Let's change that color. Let's go. Yeah, yellow. You can't see that on there, can you? Go deep sky blue. Click OK. Template, load. Risk reward. Bigger. Oh, no. Save. Click play. Okay. So we can see here, this one was just running. This one just ran. There was no real pullback here as such. Could I have made a bit of extra money by not letting it run into the close? Probably, but not got a crystal ball. Don't know if it's going to continue to run. One thing I do see that may be useful if we do break through, and I'll see if it happens on other ones. If we break through a next resistance after we take the first contract off at this, is to be automatically adjust underneath the next level. That might be useful. So let's just go and check a couple more trades, breakthrough trades. Now that's no good because that goes to the end. Again, you've got to see if it occurs repetitively, if it's going to be a decent logic. Didn't break through. I mean, that did exactly what it's supposed to do. Hit the next zone, and when it crossed, it went out. Didn't push through. No. It's something I'm going to take a note of, just in case I get more occurrences, because it's a one-hit wonder so far. I'm just going to take a mental note of that. See. So, and then another question I'm sure you will ask is, what's the frequency of reoptimization? Wow, we left a lot on the table there, didn't we? Okay. Get the what time is it? Okay. Go extensions. Load up. Okay, so we just got to 140 and it adjusted it to 160 here. So, sorry, to 400, then it adjusted it to one, you got a 160, or 200, sorry, 200. I think if we go and get a nosebleed around 400, we should be really aggressive at, say, 300. What I'm going to do is just do a change on that now. So I do have the spreadsheet with that there, because that left a lot. And when you get a big runner like that, 400% is huge. And I think we should be more aggressive on that last stop loss update. So let's go and change that one, I think. That was a reversal, I think. So I'm going to add that now. So I'm just going to change that one to 300 there. And I'm just going to go and add here 260, 160. Whoops. 400, 300. Okay. Let's see that. The only one we adjusted before was a continuation trade. That's better. That's better there. $22,745. That's improved it quite a bit. So we've gone from 89.47 to 88.89. Yeah, I've got the NinjaTrader meeting soon. Yeah, I've got to get off in 5 minutes. Thanks, Gary. Okay, there's 5 spots left, Larry. Let me just give you the link. So the link is going in the chat box now. Okay, it's $2,250. May seem a lot, but it's actually going to be $3,000 a year when it's released on lease only. You're going to get it for life. Okay, and you get all the updates as well. So this now, even though it's a slightly less percentage win rate, we've only had 18 trades instead of 19. I'll bring the spreadsheet over. Okay. See, we had 19, 17 winning, 2 losing. We've had 18, 60 winning, 2 losing, but a greater profit. Max drawdown is the same, but by being more aggressive on that last stop loss adjust and putting those stop loss adjusts in, we're actually protecting profit more as we go along, and that's resulted in an extra $1,745 profit. Okay. So what I'm going to do is I'm just going to save that. It's going to go to strategies. So I can just round everything off. Template, save, SI 10 min. March 6th this time. 2024, iteration 2. Save. Okay. So guys, what I want you to do is I've got Franco, one of my other brand ambassadors from Germany, next week. The week after, I'm going to Singapore for my birthday for a week. So I will be on WhatsApp. I will be trading unless I'm in Singapore. And then what we'll do, we'll get together towards the end of March, get back on the 27th of March, and have another session. This time it won't be live in front of the public. It'll just be for the beta testers. There is a WhatsApp group just for the beta testers, Larry. Okay, just it's a WhatsApp group. It's purely because I'm on the go a lot and I can respond on the phone. So what I want you to do is concentrate more on the optimization for these stop loss adjusts for your specific instrument. Remember, by the end of this week, you've got to tell me which instrument in the WhatsApp group that you're getting married to for this beta testing for the Zone Trader Pro. You cannot divorce halfway through. You must get married and stick to that instrument. Please, nobody choose NQ. It's just too volatile, okay? Let's be sensible in the instruments that we trade because we want to take these on and trade them with real money, okay? So look at that max. So when we go back to the back end, some of the things to look at here is also when you're optimizing, I want you to look at these stop loss adjusts and get the right one. You're always going to be on the 10-minute, 60-day look back. And I want you to really get, maybe even look at the break-even stop loss update, but leave that as it is for now. I really want you to concentrate on these stop loss updates because then I want you to run it in sim and make sure these things happen, okay? It's good in back testing, but it needs to run. So run it all week in sim. Don't switch it off, okay? If you switch NinjaTrader off or switch your computer off or your computer goes into hibernation, the strategy will not trade, okay? Get your optimization done, shove your XML sheets in there, in the WhatsApp group, and we can go from there, especially if some of you do the same instrument. And then it's this max fib anchor. That's another thing I'd like you to play with as well. Reduce it a little or increase it. If you notice that the native timeframes, when they have a confluence and giving you the losing trades, take them off. See if that makes a difference. That's all I want you to do really for the next month or so until I get back at the end of March. Okay. Okay, guys, thank you very, very much. I've got another meeting in 1 minute, so I've got to get off. Don't forget, if any of you, that link is in there for that beta test. We've got 5 places left of the 20. Get in there, get on, and get it for life. Cheers, guys. Thanks, everybody. Speak to you soon.